Hey traders, Raghee here, and in this recap video I'm going to walk you through part of what we talked about yesterday with gold. So this is going to walk you through the technique I use, one, to put on what I call a trailing stop trade, and how you can benefit from a market rolling back around. So let's talk about gold. Yesterday our gold long position had a very good day. It fell short of the 1318 level that I wanted to see to the upside. I mean, we only got up to 13.15.8, and then we only got up to 13.17. So what happens if you had a stop order waiting to take profits off the table, but it never hit? What happens then? Or you know that the market had a really good day in your favor, and you don't want to take the ride back down to 1300 again. So this is really a risk tolerance conversation, but we can get very tactical about it. Now, yesterday I talked about the 5 and the 15 both being candidates for what I call a trailing stop trade. Now, what does that even mean? You know, this is something I've made up, but it's a technique that allows you to take another valid trade that's simultaneously working and say, well, when this trade stops out, I'll use that as essentially what we would call a trailing stop. So rather than just arbitrarily assign a percentage or point or dollar-based trailing stop, we use the validity of an intraday trend to say when that intraday trend is broken, I'll go ahead and get out. So let's talk about how that worked and how you can use this in any market. So the gold market took off. We had propulsion dots. We had green grab candles. A lot of traders took some of these bounces off the levels. Mostly the 5 was the most tradable. The 5 was the most tradable. Most of the traders in the room decided to use the 5 or 15. So there's the same move. And then when the market rolls over, the propulsion dots disappear. What else? We plot blue grab candles. What else? We get our first red. We break the 34 EMA on the low. That trade is done. That 5-minute validity for the swing, or sorry, for the trend following swing buys, the intraday trade is done. Well, we don't have this trade on, but it gives us insight into where we might want to go ahead and close the trade out. And it did pop up a little bit higher, but it was the same conclusion. It rolled over and it kept heading lower. If you took the 15-minute time frame, interestingly enough, either way, you were pretty much out at the same level, which ended up being a 13.12.5, basically 13.12.5 level. So either way, you ended up with that same rollover. It happened a little sooner on the 5, happened a little bit later on the 15, but the conclusion was the same. The market rolled over. Now, once the market rolls over, you now can start to say to yourself, short term, I'm calibrated to what? A downtrend. And now what I'll do is I'll take advantage of propulsion. I can play the Darvis breakdowns, propulsion. I can play again, the zone between the 13 and 21. Again, zone 13, 21, Darvis breakdown. I mean, there's so many, I think 1, 2, 3, 4. I'm counting 4 different really validated entries on the way down if you want to be nimble. But the reason you knew to make the switch from expecting the bullishness to the bearishness started with a very simple, elegant little pattern called a wave reversal, which is when does a swing environment shift and create an intraday trend reversal. And that's how gold played out the last 2 days. Hope that was helpful. Take a look at some of these tools, the grab, the wave, the propulsion, the Darvis. They are needle movers. They do not need to replace anything you have on your chart right now. They will simply automate, do all the heavy lifting, kind of auto chart, right? Your support resistance, your market trend analysis, and your acceleration. These are all valuable tools no matter how you trade. I hope you check them out. They're available for free in the trading app store for TradeStation. They're available for free on the Trading View. If you search for Simpler, you will see these tools. And also they're available on Thinkorswim. Not native, we do have shared charts. We have that for the members, and we did the free chats last week, so all of you got to check that out. I'm hoping at some point we'll also make those available on the Thinkorswim platform. So check them out. I've made them free for a reason. I do think they really are going to help you as a trader. That means the world to me. Thank you for all the feedback. I'll see you in the next update.